You're listening to the Valley Current.
Typically in California going to be viewed as employees under AB5, Assembly Bill 5. But we're now in a special situation where California is probably going to recognize that in a layoff scenario where you would otherwise lay people off, it's better to offer them a chance to be contractors and maybe suffer through some degree of AB5 exceptionality that may play out over the next 6 to 9 months. So that's a novel point that I'm making, that maybe the courts will say, look, if you say to someone, we don't have enough work for you, but we have part-time work on a contractor-only basis, are you willing to form your own LLC and create your own business and try to spread it to 5 other companies? Let's say you have someone, for example, that does your bookkeeping on site, but now they're not on site. Let's just say you say to them, we can't afford you to do this bookkeeping more than 1 or 2 days a week. Can you suggest to them they convert themselves into a business where they have 2 or 3 clients that they're spreading their LLC across, and they really are forming a small firm? They're forming their own gig economy firm to handle 3 to 5 other clients that you may even help them find. You may say, hey, law firm B, law firm C, law firm D needs your accounting services as well. So that's conceptually a way to maybe soften it for someone who was otherwise full-time that you don't have enough work for because you're otherwise downscaling the business. So we've started with payroll, we've gotten to termination, we've gotten to alternatives of termination like contracting, but you've got to take some precautionary steps as you do it, right?
I agree with what you've been saying. Do you have any news on the regulator perspective?
Well, I think what we're going to see is some changes and softening of the effect of AB5 and other legislation that was at the top of the market. Look, at the top of the market, people were worried about Uber and Lyft and these gig economy companies somehow treating employees as contractors. There's obviously big legislation that's out there for this. But the bigger question is, when you're in a crisis and people just want to earn some amount of money, do you have to accept that there's going to be alternatives to employment? There's going to be, there's all sorts of ways to do this, but conceptually, there's going to be some realization that we have to actually get a lot more efficient. And you could say that's what happens when you have a jolt like this in the economy. Everyone starts to realize there's smarter ways to become more efficient. I mean, obviously, to some degree, it may even get to the point where people are more efficient in the way in which they use their real property. My mom right now, bless her soul, 90 years old, lives in 4,000 square feet. My sister, with her family, lives in 1,000 square feet. Logically, my sister should move in with my mom in Florida because they have so many more square feet in Florida that she can spread to my sister's family, and my sister can take care of her. My sister's in her 60s or soon 70s, can take care of my mom in her 90s with a view of creating economic and accounting value in delivering services that are not taxed, because those services are in-kind services from one family member to another. So it generates some efficiency as opposed to having people who are actually paid for coming in to support my mom. That's just an example, but the analogy is there from the point of view of a firm versus a household, right?
Yes, absolutely. And while we're citing interesting details, PwC did a golden age study, determined, this was their UK office, they determined that a more efficient use of our older workers would increase the U.S. economy by $800 billion a year.
Steve, what's happened right now in New York, and I'm sure it's going to happen throughout the United States, is all of the retired doctors are being called back in for part-time duties at hospitals in New York throughout the state. I'm a member of the bar in New York as well as California, so I keep track of these things. In general, retired people, which could be people as young as 62 or 65 years old, it's hard to believe people are retiring that young, but they are. They are all very talented people who can get called back to work. It's almost like a form of public service to be called back for a crisis like this. And you could argue that starts at the household, because households will renovate themselves. So my mom at 90, with my sister at late 60s going into her 70s, will say, look, let's do something economically rational. You've got 3,000 extra square feet. You only live in 1,000. I only live in 1,000. You've got 4,000. We can share the space. I can save the rent or the mortgage payment. I can support you through your old age, Mom. There's so many smart ways that this sort of crisis plays out. And you could argue that same thing plays out across firms and companies throughout America. That's what's going to play out.
Especially for the parents whose children are being sent out of school.
Right.
And we're now facing the issue, are they allowed to bring their children to work? Here in California, child labor laws don't permit children at the workplace. What I've heard from California Franchise Tax Board and what I've heard less specifically from other tax regulators is that the coronavirus will be considered reasonable cause for all sorts of tax compliance failures. And the tax authorities are going to be gentle and broad in their interpretation of what is included as a coronavirus reasonable cause. So in deciding what the AP department is going to pay first and pay last or near last, I'm not sure I'm allowed to say this, but if I were allowed to say it, I'd say that tax probably wants to be on the lower portion of this pile.
Right. I mean, you're putting it in the area of, look, when you're in a crisis situation, I don't think that people expect to do tax audits of firms that are closed. I don't think our books and records are going to be available for tax audit for the period of time that the office is closed. Nor do I think the tax people are so foolish to test the case in front of a jury where there can be jury nullification. And the jury says, are you kidding me? They converted that person to a contractor because that person really needed to get paid something. And they simply said, we don't have enough work. And you're going to criticize that decision. So I think there's a certain reality that's going to play out here as people start tightening their belt and as firms realize that they're in survival mode. So that gets us to kind of the fifth point, because we started with payroll, we went to termination and doing it the right way, and there's certainly the wrong way to do it. We did the suggestion that people become a contractor. We did the suggestion that you look at available resources to support the downsizing of the firm. So let's look now at the other side, which is beyond managing your own payables. How do you collect on your receivables during this period? The courts right now are closed. I mean, you can file a lawsuit electronically, and therefore you can put a stake in the ground that you have a collection case. But how do you deal with actually making the collection, where cases will not go to trial for at least 60 to 90 days beyond whenever they reopen? We had a trial date that was set for March 31 in a case where we received a notice, and it does involve a significant amount of money. And we received a notice saying, sorry, everything's being pushed back 90 days. There won't be any collection in that case for 90 days. So what do you say to those people that have, say, 7-figure, sometimes 8-figure accounts receivable that are essentially now going from regular pay within 10 to 30 days to you're not seeing people pay? What do you say to those people, Steve?
It's a real challenge. My heart extends to them. The Small Business Administration is giving SBA loans up to $2 million. Personally, I think that vendors and employees be at the top of the list of who gets paid first. and that if receivables are a problem, it's worth looking for the long term at your credit extension policies, and whether you were in that group of companies that spent most of their efforts chasing bad business and giving credit to people who should never have been credit, or companies who never should have been given credit to begin with.
Right.
Um,
In general, I'd say to people, we're probably going to see soon the Fed suggest get all those receivables into some bank line of credit that extends it over those receivables, and the Fed will guarantee the bank will be able to collect as a secondary guarantor to just keep business open and keep people employed. So let's pretend at Computer Law Group that we had $2 million worth of receivables. We don't, but let's say we did. We would go to the bank, like an SBA loan, and we'd say, look, give us $1 million against that $2 million line of credit. The Fed is willing to back with no points, no interest, no nothing as a secondary guarantor. We've been in business for 40 years. We're going to be in business for another 40 years. Give us, or more, please give us a chance to catch up here. And the Fed will probably buy that commercial paper. That's the suggestion. And the bank should essentially open up their accounts and say, we will provide that 50% coverage because we feel pretty confident that once things get back to normal later in 2020 or maybe even in 2021, we'll be okay. We'll get those payments to occur. And if they don't occur, the coverage ratio is still pretty high. So I'd say if you're managing a small firm or even a big firm like Ford or GM or even Tesla, which has a lot of debt, you have to be working with your banks and really working with the federal guarantee programs that are currently in draft legislation, how quickly they become real legislation. We've got a particular president that's exactly right for this kind of crisis because he likes debt, he uses debt, he understands debt, he's okay with debt. He's like, float the boat with debt. Worst case, there'll presumably be a lot of inflation in the United States. I don't know what that does to the price of a Starbucks cup of coffee. But at the end of the day, debt is okay. And I don't know of any president other than Trump that has been through more debt in his lifetime that will ever be imagined. And so I think that's probably a checklist item, which is look at your receivables and then figure out how much of them can be pitched to a bank for a line of credit or for a factoring kind of arrangement. It's called receivables factoring, to be in a position to turn that to cash, and that cash can be used to pay for the operational necessities of keeping the business open. You have to think that way, right?
Something that worked for me when I was running a past business was including a application for credit in my the purchase paperwork that I gave my clients. And this credit application was signed by their procurement department, not by their legal department.
Right.
Their legal department would have killed the deal if they read the fine print.
Right.
But the purchase department is used to signing applications.
Yeah, that's good. But I think what you were saying is, look, you're going to have to take on a little more risk. You may have to accept the fact that lawyers are going to have indigestion, accountants might too, but you got to eventually get in the queue for these federal benefits. So for example, for a small law firm, there's a company right now that'll factor receivables called Bill Pay or Pro Bill. I'll find the name of it. But conceptually, they're in the business of saying, if you've been in practice for more than 10 years, more than 20 years, more than 30 years, more than 40 years, whatever is their number, I think it's more than 10, and you're not going anywhere, we will help you factor your receivables so that you can turn them into cash and they're not sitting as just dead receivables. And you have to start looking at that because receivables management is just like payables management. It's an important part of running a firm, just like everything else, like what is your payroll and who's outsourced and who's not outsourced, and what are you automating and what are you not automating. And you could argue all of these forces are now under the bright light of a pressurized situation where you have to get serious about being efficient or more efficient. And you have to be serious about what do you really need to run your practice and what do you not need to run your practice. So painfully, for some law firms, I don't think it's ours because we control our real estate and bought real estate here in Palo Alto a long time ago. But it may be that for some firms, they will have to go completely virtual. That is, give up their office leases. As bad as that sounds, cutting the landlord out or negotiating with the landlord after negotiating with the bank or vice versa becomes pretty important. I would assume that's on your list as well, right, Steve?
It brings up a question I was going to ask you. Where should the mortgage payments be on this list of who gets paid first and who gets paid last? Can I be evicted?
Yeah, I mean, I think the answer to that question is when you look back in 2007, 2008, there was a freeze on paying mortgages that resulted in a lot of consternation about, is the system collapsing? Are people disbelieving in buying real estate on a loan where the loan is secured by a deed of trust, and people were returning the keys because they were so underwater? But as a general proposition, what I would say is I think the lessons of 2007, 2008 have created a view at the Fed that they will just provide some alternative financing for people who want to stay in their real estate, because the cost of doing the workouts that are still, some of them are still going on, some of them in Florida from 10 plus years ago are still going on today. So I think negotiating with your landlord makes sense. I also think that somewhere in this, there's a relationship between your bank, the Fed, and your landlord, so that the landlord can get paid and meet his or its or her obligations to the bank. Because obviously all these relationships are interconnected. And when one is impacted, another is impacted, and yet another is impacted. Right now, the demand, the likely demand, I guess I should say, because I can't even say that our firm has had decreased demand, but our anticipation is that the likely demand for legal services or accounting services or professional services will either increase dramatically from those who are in dire straits, or will decrease dramatically from those who are otherwise flush and who are simply saying, look, we just don't think that we have the spend power right now for dealing with professional services. We're going to defer, delay, and we'll see what plays out. Our higher priority is our people and our customers, and you're just a vendor in this story. I don't know. I mean, I've gotten calls left, right, and sideways and feel like I'm more busy rather than less busy. And the virtual aspect has actually improved to some degree how much efficiency gets driven into the equation, because you're not spending time driving and going to meetings and doing stuff that would otherwise be non-billable. You're right there doing it at the very moment. So that gets us to the bigger question, Steve, which is, when you look at what the tax man has to say about this, we've already had a delay to July 15, right? There's some adjustments that are happening, correct?
That's an open question because the Treasury Secretary announced it via tweet, which apparently is the norm these days. So it still needs to be formalized, but my understanding is that yes, we will have until July 15th for both filing and payment, and that California intends to comply as well, but it's not official yet. So I can't
Okay, so right now we hit a March 15 day for entities, right? Was that extended, or was that still a good day?
It was not extended to my knowledge yet, so it's maybe.
But the odds are high that if someone delays a corporate filing or a partnership or LLC filing, and they missed the March 15 date, I would assume, I don't know what March 15 fell on. Was it a Friday or was it a Saturday? March 15 this year.
It was a Saturday, and the 16th was the actual deadline. But I think it will all fall through the threshold of reasonable cause excuse,
Right.
and you'll probably be okay. If
Right.
not, see me. I tend to agree with your earlier comment that legal and accounting will increase, not decrease.
Right.
Though it depends upon who you look at and how they do things. And there's things that are critical. And, as an accountant, generally for every dollar in fee that I bill, I aim to save my clients $10 at least.
$10?
Yes.
10 to 1?
Yeah, at
Wow,
least.
you're better than me. I like to say to clients, the return on investment you should see from good legal advice is at least 5 to 1. You're saying good accounting advice gets you to 10 to 1.
If I'm not seeing a 10 to 1 to be contribution to begin with, then I don't want the business.
Okay.
It's not my core competence. It's
Well, that's
not
good.
creating significant value. Sometimes I miss. There have been cases where my savings to a client has not reached what was expected, but those are the exceptions.
That's
And,
interesting.
and
People don't think of that in the way you just expressed it, or the way I just expressed it, which is your accountant and your lawyer are like your partners at a board level attachment. That is, if you think your board member is important, let me tell you, your accountant and your lawyer are arguably more important because they're actually doers that get things done. Your board member is going to give you some advice and give you some recommendations, and then go home and maybe play around the golf and pick up a phone and maybe make a few calls for you. But the people who are actually going to do the hard work, whatever that hard work is, are often your accountant and your lawyer. So think of them as part of the C-suite, the CEO, the CFO, the CRO, the COO, the MO. There's so many. There's marketing, there's revenue, there's sales, there's information. All those CXO officers, your accountants and your lawyers are like part of that suite of people, and they're helping you make these judgment calls in crisis that are not necessarily obvious, because we're in a new terrain and no one knows what the timeline is exactly, and no one knows exactly what the alternatives are. But taking all the brain trust available from all that resource should produce more value than doing it without and making mistakes along the way, right?
absolutely. And going back to the client who has $1 million of uncollectible receivables, well, they didn't use a good lawyer to craft their line of credit request.
Right.
And they gave credit to their process was broken. They didn't bring in a good accountant to look at their controls
Right.
over extension of credit. So, and that's spilled milk. We can only look forward. We can't look back. But for those clients who are a good fit, I do aim to produce that 10 to 1.
And what I would say to people as we wrap up is, think about this. You really should make a record of trying to do all the things we suggested during this podcast. Look at how you adjust your payroll. Look at how you shift people appropriately to contractors. Look at how you outsource. Look at how you automate. Look at how you negotiate with your bankers, negotiate indirectly with the Fed, negotiate with the tax people, negotiate with the various banks that you're dealing with, various vendors that you're dealing with, landlords that you're dealing with, tax people you're dealing with. And then if that doesn't work, you've got to make some plan for how you're actually going to wind up the business, if that's where you're at. And that takes a whole special new set of competencies for people who do essentially bankruptcies and what are called assignments for the benefit of creditors, ABC work. There's certainly going to be some percentage of people or some percentage of firms, companies, that will go, unfortunately, through that death-like process of wrapping up. Those who survive will be more successful. Just like you could argue that Darwinism is playing out with people who don't survive this virus, the stronger will survive and get beyond it. You want to be part of the stronger. So figuring out how to stay strong through this crisis makes sense. And obviously people that have more cash on the sidelines are going to be able to pick up businesses and properties and assets at probably 50 cents on the dollar, maybe even 25 cents on the dollar. We're going to see it, right?
And for those people who are less fortunate, who do lose family members or employees to this, there's a couple of bullet points I want to mention. That having a durable medical power of attorney is of critical importance. I lost a client who did not have one of these, and fortunately it worked out, but things can get bad.
Yes.
If you don't have a durable medical power of attorney.
And by the way, that's available online for free in California on the calbar.gov.ca site. That's calbar.gov.ca is the website.
Thank you. Revisiting your will and trust, making sure that any refinances have been entered into the trust list of assets. A trust is worthless if you don't refresh it.
Yes.
When you have major changes.
Yes.
And tell your employees about these two key points. Make sure they don't lose elderly family members without this. For partnership type structures, a buy-sell agreement is important. And there's a whole checklist of things that should be in a buy-sell agreement in terms of how things are to be valued. For example, what buyout price is to be paid.
I got a call this morning from London from a family that I had represented for many years. They had since moved to London for a variety of business and personal reasons. And they said, Jack, we're just thinking in light of this virus, and they're both getting older and they're probably heading towards their 70s. We just thought to ourselves, gosh, we haven't really paid attention to our estate planning. We don't do estate planning here. But they said, we also have a lot of intellectual property and a lot of investments in the US. We're in England now. We need to figure out how to normalize that for the fact that we're getting older. And now we've realized we haven't done the right business planning around those assets. And indeed, in some ways, you could argue this shock, this crisis, this jolt to the system is waking people up to things that you and I would say, oh, that's just a planning item, add it to a checklist. The checklist becomes less relevant until it becomes obvious that, hey, we don't have a lot of time on this earth. Most people don't get to live to 100 years old. Most people don't even get to live 90 years old. The average female age of longevity is something like 82 in the US. This coronavirus will have an impact on that average. The average US male age is 77. This coronavirus will impact that as well. Obviously, as people get older, they should be thinking about these points and thinking about how they want to plan their estates and do a variety of other things. And they do impact on law and accounting, as we're talking about, for sure. There's no question about it. So on that, Steve, why don't you tell people where you're at and how they can reach you, and then I'll tell people where I'm at. We both accept items by email, but why don't you start by starting with your phone number and your email address?
Sure. I can be reached on my cell phone at 408-887-6433. And my website is www.srabin.com. That's S for Steve, Rabin, R-A-B as in Bravo, I-N.
And Steve does pick up the phone. I don't think there's a single time I've called you, regardless of whether morning, afternoon, or evening, that you didn't pick up your cell phone at 408-887-6433. He answers email. I think the email is steve@srabin, S-R-A-B-I-N. Steve is S-T-E-V-E @srabin.com. If I've gotten that right. Have I gotten that right, Steve?
Or srabin@srabin.com.
Either one works, right?
Yes.
Okay. And I'm Jack, J-C-K @computerlaw.com, or J Russo, J-R-U-S-S-O @computerlaw.com. And also our number, but now it's forwarding to my cell phone, is 650-327-9800. The direct cell phone number is 650-444-2240. I think at the end of the day, if people have an urgent law or accounting or even a non-urgent law or accounting, we collectively, between the two of us, probably have close to 100 plus years of experience, certainly even within our firms, and we can help you. And Steve's been a longtime friend and CPA and accountant, helped us as an expert witness, helped us in a lot of other ways. So we're glad to do this special session. Any follow-up remarks, Steve, before we end it?
That everybody's in good health and their family is
right
and remains.
Right. Yep. Thanks, Steve. Thanks for your time this afternoon. We'll get this published and out to our clients and send you the link so you can send it to your clients as well. Thanks very much.
Likewise, Jack.
Sure. Bye-bye.
Tune in next time on the Valley Current.